Welcome to the Visegrad Insight Podcast.
We bring you global experts on the future of democracy, security and economy.
The leading voices from Central Europe and on Central Europe.
Hosted by editors of Visegrad Insight.
Powered by Erste Foundation from Warsaw, Poland.
Hello everyone. Today we'll be talking with Mr. Andreas Treichl, as chairman of Erste Foundation and former CEO of Erste Group Bank. So this will be a lot of talking about the finance. Hello, Mr. Treichl.
Hello, nice to meet you.
I would like to ask a somewhat personal question first, because early in your career, well, maybe not that early, but quite early in your career, you made a quite strange decision. You were in the Chase Manhattan Bank, in the center of world financial system, with a stellar career, and then you decided to take over quite small Austrian institution, Erste Bank. What drew you to make this decision to change from Wall Street to Vienna?
Well, basically, I had been living abroad for 15 years, so I thought it's a good idea to come back. And I knew Erste from when I was a student, and it was a small savings bank in Vienna, but 200 years before, the founders of Erste Savings Bank founded lots of savings banks all over Central and Eastern Europe. And I had the feeling that all those savings banks that then had been merged into large state-owned institutions in the Czech Republic, Slovakia, Hungary, and everywhere in Central and Eastern Europe, that I would like to reunite them into one group. That's why I basically took over that job, not knowing whether it would actually work out. But fortunately enough, very shortly after the fall of the Iron Curtain, it actually happened. And then I founded Erste Foundation and used it to finance all the acquisitions that I did in Central and Eastern Europe. That worked very, very well until the financial crisis came. And then I had quite a few problems to finance the debt that I had accumulated during the 10 years before, buying banks in the Czech Republic, Slovakia, and Hungary, and Croatia, and Romania that were a lot larger than our little savings bank. But it worked out. And since more than 10 years now, we are a really strong group in the whole region of Central and Eastern Europe. And I regard Austria as being part of Central and Eastern Europe. So, it was with some luck, I was able to build what I actually had planned to build.
Yeah, well, Erste Bank is the largest retail bank in Central Europe. Surprisingly, not very present in Poland yet, but because it wasn't the part of the portfolio that you mentioned so far. But probably I assume that's going to change sometime in the future. Could you tell us a little bit more, because that was quite a ride you had from 1997. Could you tell us how the financial crisis impacted your thinking about the management of the bank and the banking system? Because that was a huge change. Well, the banking crisis and then Euro crisis.
Well, the financial crisis was not in the region of Central and Eastern Europe. It was not so much based on what came from the United States, the mortgage problem that affected all of Europe. It was the fact that in 2008, 2009, the central banks and all the rating agencies got incredibly negative on Central and Eastern Europe, totally unjustified. Poland is a very good example. Poland went through the financial crisis in a fantastic way. But Moody's and Standard & Poor's and the Federal Reserve Bank and also the European Central Bank were incredibly critical about the whole region. And since at that time we were the largest bank in the Czech Republic, the largest bank in Slovakia, largest bank in Romania, and one of the largest banks in Croatia and in Hungary, we got terribly affected by that, and it was very, very difficult to fight against it. If you remember, I think it was in 2009, when Paul Krugman, the Nobel Prize winner, who was very famous for doing good predictions, he wrote an article about Central and Eastern Europe and called it Argentina on the Danube. And so all the ratings got terribly hit by it, and it was a difficult time and partially totally unjustified. Much was also based on the foreign currency lending that all the banks did, including, of course, in Poland, the Swiss franc loans and all that. So it took about 4 years to get out of that crisis. But we did, and we did it in a very good way.
It's probably not the first time that the criticism and analysis is unjustified toward this part of Europe, I would say. We are
absolutely not. No, you're right on that. That still makes me very, very angry that people still look at our region as the Wild East. And if you talk to people wherever in Portugal or in Belgium or whatever, they tell you, these wild guys in Eastern Europe, they're totally different from us. That's still around in 2025. And that goes very much on my nerves, because it's totally untrue. I actually believe the contrary. I believe that Central and Eastern Europe, so that countries like Poland and the Czech Republic, will be much stronger than Western Europe in 10, 15 years.
Well, Poland possibly joining G20 is a sign of that, probably. Now, I want to ask you about the role of the bank in the society, because the Erste Foundation is a clear demonstration that you have thoughts about that. Well, banking in general is not usually considered, let's say, very society friendly. I would say the banks are usually the enemy number one. Whenever something bad happens, it's the fault of the banks and bankers. And we know that for a long, long time, and it's associated with various stereotypes over the, I would say hundreds of years so far. What do you think is the role of the banks right now in those volatile times, and how they can help out the society in the volatile times we are experiencing and probably keep experiencing in the coming years?
Well, there are two things to it. One is banks have never been really liked over the past 1,000 years. And I think that a big part of that is not the fault of the people, but it's the fault of the banks themselves, because they have not played very often the role that they should play. And in principle, you have to say that banks are taking care of the second most important thing in people's life, which is their financial health. The most important thing is physical and mental health. But if you take that very serious and say that, of course, as a bank, you have to make money because you have to lend money. And in order to be able to lend money, you need a lot of capital. But we're not here to sell products to people. We're here to take care of their financial well-being. And if we do that seriously and in a good way, I think we also can change the reputation of banks. The second point is that unfortunately in our region, and that's true for almost all of Europe, the role of banks is much too big. That's not the fault of the banks. That's the fault of the fact that we have no capital market culture in our regions. and that banks, therefore, in most of Europe, replaced equity with long-term financing, and that needs to stop. That needs to stop because in all the new industries, in the AI industry and the digital industry, in all the intellectual property industries, bank lending is not the appropriate way to grow. It's equity. And one of the reasons why Europe has become so strong is because the role of capital markets is much too small in Europe, and the role of banks is much too big in Europe. And that needs to change over the next years. But for that, we have to work together with politicians who really understand that this is a problem.
Yeah, because banks by their nature are pretty conservative, and the new technologies by their nature are pretty risky. So this doesn't play very well together, so to speak.
Hi, if you're enjoying this episode, why not subscribe to Visegrad Insight? This gives you access to all our latest content online, as well as to our live and online events. You can use our special promo code for Visegrad Insight podcast listeners to get 35% off. Just go to visegradinsight.eu, choose a yearly subscription, and apply code Visegrad35. And now, back to the podcast.
Yeah, there are many reasons why banks are not liked. One of them I want to call it because this is very unfair, since you borrow somebody else's money, but you have to give back your own money. So that's always unpleasant. Could you tell me how the institutions, like the financial institutions, can balance those two things that you are mentioning? One of them being profitability, and some schools of thought say that that's the only and main goal of any corporation, and common good that you sometimes refer as that translates sometimes in public trust to the banking system. How do you balance those two things? Because, well, we know it's not always balanced very well.
That is very true, and I think that you can make the link very easily. The goal, and that's not only true for banks, that's true for all profit-making entities. So it's true for the whole business world. The business world has to strike a balance between what is required to satisfy the owners of the businesses, the employees of the businesses, and the clients of the business. Those are the three stakeholder groups that any business has. It has the owner, it has the employees, and it has the clients. All of them benefit very much from a secure and peaceful society. If you want to have a secure and peaceful society, you need to be aware of the fact that you can have a secure and peaceful society only if there is some redistribution. And redistribution cannot only be done by the state. Redistribution has also been done by successful businesses. So we believe very much that we do not only have a responsibility vis-a-vis our owners, our employees, and our clients, that we also have a responsibility vis-a-vis a society. Because we, as a company or as a bank, benefit tremendously if we operate in a socially balanced society. Because a socially balanced society is the basis for a peaceful and prosperous society. So we take that very seriously, and we concentrate on the strengths that we have, which is, one very good example is housing. Housing is a big issue for young people. Many young people today are not in a situation that they can afford to have the housing they would like to have for their young families. So it is our responsibility to work on building a very well-structured housing portfolio of commercial housing, affordable housing, and social housing. And that is something where banks can play a very, very strong role. And I also think that's a very, very important issue for Poland, which has been growing extremely well. It's a very, very successful economy, but still there are lots of young people in Poland who cannot be part of that. And banks can help to intermediate.
Yeah, however, here we had a mixed experience with that, because we had multiple government programs actually that were trying to make the loans, mortgages cheaper. However, the only result we got was an increase of the prices of real estate, because in here the real problem is supply, not the demand.
Exactly, and we can play a very, very strong role. And Erste Group is very good in that, in playing a strong role in increasing the supply in order to bring prices down. And that's a role that we intend to play whenever we come to Poland. That will be a very important business for us.
Yeah, that's a very important thing to understand where the problem actually lies, because very surface level understanding, very often by politicians, but very often also by electorate, leads to the wrong solutions here. But moving forward towards what you're mentioning here, and the role of financial institutions, yes, the Europe is continental Europe. Let's put it this way, is different than US or UK because of lacking financial markets, and that probably needs to change. I would like to pick your brain a little bit about the discussions about the change in European level system, both with respect to banking union and joining the financial markets. Are those discussions going in the right direction fast enough, or we need something else here?
Well, no, the discussions are not going fast enough. The discussions are much too slow. And that is one of the biggest problems that Europe presently has, is the very simple fact that we have not finalized what we started to do. If you talk about, not even about Europe, if you just talk about the European Union, you have 27 members. Out of those 27 members, only 19 are in the euro, and 8, like Poland, are not. And some of the members that are not part of the euro, like Poland, are economically the strongest. Sweden is not in the euro, Denmark is not in the euro, Poland is not in the euro, the Czech Republic, all these countries are not in the euro, and all of these countries are actually very strong. So we have not completed the banking union in Europe, and we have not even started to build a capital market union. And we have totally failed in Europe to develop a very strong capital-funded pension system, which is the basis for a capital market. That's lacking in Austria, that's lacking in Poland, that's lacking in Germany, that's lacking in Spain, in France. The only countries that are in Europe that have, in continental Europe, that have a strong capital market system and a strong capital-funded pension system are the Scandinavian countries and Switzerland. Which is not even in the European Union, and that is the basis of wealth for the future generations. So we need to build strong capital-funded pension systems in Poland, in the Czech Republic, in Germany, in France. We need to do that quickly because it will take 25 to 30 years to build it. And that needs to be the basis for a strong European capital market that also needs to be built. So we need to finalize the banking union, and we need to build a strong capital market union in Europe. And every nation state in Europe will benefit from that dramatically without actually reducing the independence of the nation states.
Yeah, it would seem so. Everybody is supporting the integration as long as they don't feel threatened. So Germans were talking a lot about, for example, banking union and free flow of capital until one of the German banks wasn't the subject of possible takeover by the Spanish banks, and then out of the sudden Germans changed their mind for this particular reason. Do you think in this climate really the union is possible within a reasonable time?
Well, I hope so, and I hope that the politicians finally realize that it is never good to start things and don't complete them. If we want a European Union, we need to work on economic integration. And capital markets, pension funds, and banking are an integral part of economic integration. And what national politicians need to realize is that the integration of capital markets or banking does not affect their national sovereignty. That's total nonsense, and that is what we need to overcome in Europe. If we don't do that,
I believe it is a nonsense too, but it's quite politically, let's say, easy to utilize. In Poland, a couple of years ago, we also had this: we need to take our banks from the hands of Germans, and everything will be beautiful. And of course, the government did repolonize, as they call it, or basically nationalize a lot of banks. Well, nothing changed, or at least nothing for the good. But my observation is that the politicians are always a couple of steps behind, and whatever they say we should do, that should have been done a couple of decades before, probably. And how do you look at the banking system from the point of view of dangers or maybe opportunities? I don't know what's your view here, coming from the technology. So I don't even go into AI because everybody talks about AI and not necessarily knowing what they mean, but I mean mostly fintechs of various kinds and alternative systems of payments.
Exactly.
Do you see a big problem for the banking system?
Yes, very much so. That the nationalism in banking is simply totally stupid, because people want to have good services, they want to have good products, they want to have easy access, and they want to have it available 24/7. And whether the bank is Polish or Swedish or German or whatever, who cares about that? You want to have the best product, the best service, and the best quality. Now, is Revolut Polish? No, but the young people in Poland will use it more and more and more. Is FlatEx Polish? No, but young people will use it more and more and more. Is Trade
But Blik is Polish.
Polish? No, huh?
Blik is Polish.
Cool, yeah, Blik is Polish and Blik is very good. And if Blik is better than what we have in Austria, I would use Blik. I don't care whether what I use in Austria is Polish or Swedish or anything. I want to have the best product. Apple Pay is also not Polish, and a lot of people use it. So if we get stuck in nationalism in the banking industry, then we will just say small Austrian, small Polish, small Czech, small German banks. But the big newcomers who are purely digital, they have no nationality. but all the young people use them.
Well, I agree with you in principle. However, I would make a small caveat. So I wouldn't be using WeChat, even if it was much better than Blik or whatever Russian alternative might be there, because I don't really trust those countries. But that's completely different.
Well, that is very true. Yeah. And what is also true that, you don't do your mortgage lending, with Revolut. Or with N26. And for that, you would like to have a local bank that knows the business extremely well, where you have people you can talk to. And that is the future of banks. The future of banks is they need to be digitally as good as the pure digital providers. But in addition, they need to provide a strong local contact and strong human relations. And for that, it is very important that the people in the bank really know the market extremely well. But who the shareholders of that bank are, I wouldn't really care so much about.
Hello again! If you're enjoying this episode, make sure to give us a rating. It really helps boost our platform and invite more guests for you, our listeners.
We know that in Europe we are facing huge mess finance-wise. There is a green transition, there is aging society that requires more and more pension spending. There is this let's say, ambition to develop European AI and high-tech industry. What do we have to do with the financial market to be able to raise this money here, not in US?
That's exactly what we talked about before. If you look at a country like Denmark, which has a little over 5 million people. But it has a huge pension fund, or Norway, which also has about 5 million people. They don't have a pension fund, but they have a huge sovereign wealth fund that is basically a way on giving the population of your country a chance and an opportunity to participate in the growth of the worldwide economy. Now, Poland doesn't have that. Austria doesn't have it. France doesn't have it. Germany doesn't have it. But as I said before, Switzerland, Denmark, Sweden, Norway do have it. Now, what is the effect of that? The effect of that is that countries like Denmark, Switzerland, or Sweden can, because they spend much less money of the state budget on pensions, than Poland or Austria or Germany. They can spend a lot more money on health, on professional migration, on education, and on housing. So the key issue for the development of a strong Polish, Austrian, German, French capital market is to build very strong so-called second pillars. Second pillars are the capital-funded pension systems or sovereign wealth funds, as we have them in Norway. And if we don't do that, and if we don't start to do that very soon, we will be at a dramatic disadvantage vis-a-vis the United States or vis-a-vis China, because they have that in a very strong form. Politicians realize it, but it is not something that can be done by the European Union. This is something that needs to be done by the nation states, and they need to start doing that very quickly. And then once we have built these systems, then we can think about uniting them into a large, very liquid and broad European capital market that is so attractive that in the future, startups, venture capitals in the new industries will remain in Europe and not move to the United States.
In Poland, we do have the second pillar for the last 25 years or so. It managed to keep our stock exchange alive for that time. However, politicians meddled with it enough that people lost trust in it, which is not a good outcome. But don't you think it's too late already, taking into consideration the profile of European demographics, that we have so many pensioners, there is not enough people to start saving for retirement?
It's definitely not too late. It's not too late. And what we need to work on is remigration. We need to get, and if we have a booming economy, if we have strong pension funds, if we offer lots of jobs for young people in the new industries, a lot of the Poles that have left the country will come back. A lot of the Austrians who left the country will come back. So we can't do much about the fertility rate. The fact that the fertility rate or the reproduction rate is below 2 is a fact in all of our countries. That I don't know how we're gonna change that. But what we can do is build economies that are so attractive that people who have left the countries are returning back.
Well, in Polish case, most of them left to other EU countries, so that won't change the outlook of the entire EU, whether they will be saving in Germany or in Austria or in Poland. That will basically will be just pouring the money from one place to the other. But that's definitely an issue, and we don't really know what to do about it. Let me switch gears a little bit, and I would like to ask you about Erste Foundation and your goals. You often talk about financial health as well, one of the goals. And could you elaborate a little bit what you understand by financial health and how it can be achieved at scale in the society?
Well, no, I think the basis of financial health is financial and economic literacy, and that is not well developed in most of Europe. And the fact is that kids don't learn it at school, and the financial and economic understanding of the average European is much too low. The result of that is that although we're saving in Europe and the savings rate are relatively high, people are saving themselves into poverty because all they do is bring the money to the bank, buy building society contracts or life insurance products, but they lack the understanding is that when you're young, you have to invest very long term in the capital markets, and save and make a lot more money by that than when you put your money in a savings account. And for that, you need the understanding of compounded interest, which very few people actually have. And very few people have the ability to really think long term. And long term is not 2 or 3 or 4 years. Long term is 30 years, 40 years, or even longer. And the key to a prosperous financial future is that you start saving at a very young age or investing at a very young age in the capital markets. Keep it there. So when you leave the working life at the age of 65, you can totally de-risk and live of what you have made in the 45 years while you were working. That is the basis of the financial health in the future. And that is what people need to really understand. Politicians have to promote it. Banks and investment companies have to offer the right products for that, and we need to do that. This is one of the things where our foundation spends a lot of effort, is to really make sure that we can live in a society in the countries in which we operate where everybody has a chance to live the same living standard in his or her life after work than during working life. That is very, very important. Now, a big part of the population that we have to understand is not able to save money because they make so little that they are not able to save or invest. And that is where the state has to step in and provide the pensions for those people that cannot save. But all the people that are fortunate enough that they can invest during their working life need to find the right products which a country has to offer in a combination of payments made by the employer, payments paid by the state, and payments made by the employee, him or herself. That's what we need to build, and that's what we're working on. So the second most important issue is, or the first most important issue is investing for old age. The second most important thing is housing. And that is also a combination where banks and construction companies and building societies have to work together in order to provide housing for everybody in a country. And the third issue is, which we also do in the foundation, given that our societies are aging very rapidly, we have to make sure that people can live a healthy life. So care for the elderly is also a huge issue because that can become very, very expensive. And for that, you also need to find the right investment and savings products.
So I see in this plan basically three groups that need to be educated. First group are the people, that they know what to do. Second group is politicians, that they set up the proper framework. And the third group are the banks that need to provide the appropriate instruments to the people and to the politicians. From your experience, which one is the hardest to influence and make them understand their role?
Very clearly the politicians. Because it's a very boring and very long-term issue. So, if the Polish government would decide in January of 2026 to build a really strong second pillar, just to give you a view of what would be a strong second pillar for Poland, given that Poland has about 40 million people, Poland would need a second pillar in excess of 2 trillion euros. So we're talking about 8 to 10 trillion zlotys before you can start talking about a really adequate Polish second pillar pension system. So
I will just add here that currently our second pillar system has about 250 billion zloty in assets.
Yeah, 250 billion zloty. So it probably has to grow 20 times the size. So, if you start doing that now, the politicians that started will get nothing for it. Not even the next generation of politicians will get a benefit from that. So you would need to get politicians to work for the successors of their successors and their successors. And they then will be finally successful. This is not something that politicians really like to do. to plan 25 years ahead, but that is exactly what needs to be done.
Yeah, that sounds like an impossible task since they basically work in the election cycle anyway. So that's their basically how far they look ahead. The last question I have for you is looking into the future. How do you see the banking system in Central Europe will be changing, and where is it going, taking into consideration that surprisingly in many countries is one of the most technologically advanced system in the world, actually. Where do you think it will go further?
That will depend very much on whether politicians in the region will find the strengths to work cross-border. I think that the idea, for example, of the Visegrad countries was a very good idea, but the result of it is below par. Nothing really came out of it. And of course, there are very different situations in all the different countries. And of course, Poland is by far the largest country in that region. But even Poland would benefit dramatically from it if the whole region of Central and Eastern Europe, which are way over 100 million people, would work on building what the European Union has failed to build. And we have a lot of the prerequisites for it. This is not only build a Central and Eastern European capital market. We can build housing markets together. We can build transportation markets together. We should have, 20 years after, 21 years after all those countries joined the European. We should have a Central and Eastern European railway network where you can travel by train from Vienna to Warsaw in an hour and a half. That would be a cool thing. Where you can travel from Warsaw to the Baltics at 250 kilometers an hour and things like that. That's what we need to work on building a common zone that is much stronger than many of the regions that in Southern Europe or in Western Europe. But unfortunately, politicians are so stuck in their own national politics that they don't free up time to build on strong cross-country cooperation.
I agree with that, and especially that most of the countries have completely different orientation also in international politics. So Czechia looking mostly at Germany, and Slovakia looking more to the east, not to mention Hungary, that is still traumatized by losing its territory after World War I, and everybody's dealing with their own things, and the Baltic states looking more to Scandinavia than to the Central Europe. Everybody is doing their own thing and not cooperating. I completely agree with your point, and definitely a closer regional cooperation would be nice. That the Visegrad 4 is of course the failure. It was working very well when those countries were trying to get to EU, but that basically ended after that.
Exactly.
Now we have the 3Cs initiative that has a very different connotations, but is working on somewhat on the infrastructure. But that's definitely not enough. Thank you very much, Andreas, for your input here. And I think it was very, very interesting discussion. Thank you very much for your time.
Pleasure, Tomasz.
And that's all from this week's episode of the Visegrad Insight Podcast, bringing you the leading voices from Central Europe and on Central Europe.
Make sure to subscribe, and we'll be in touch next week.